Okay, before we begin this week, here is a scammer alert. Be careful about this account, this site, Pro Expert Trades. They impersonate people. They convince you that there's someone else. They get you to open an account on this platform, and then, well, I think you know what happens after that. So let me show you an interaction that they had with someone. That is a video of me. It's an old video because that's the old door to my house. That is me here. They're impersonating me. They're trying to get this person to open an account on proexperttrades.com saying that I'll mirror my trades in their account, and it's just $2,000 or $3,000 they need to start. It's not me. I will never ever ask you for any money, for any investment ever. And if somebody's chasing you down through chat for $2,000 or $3,000 investment into something, it's a scam. So I sent them through their help. How may we help? And it says here. It's come to my attention that your site is a vehicle for scamming people out of money. You are using my name and likeness to urge people to open accounts with you. I will be naming you in my next video as a scam. We're busy at the moment. Sorry about that. I mean, there's if you had contacted Interactive Brokers and left that message, the employee at the other end would not just say, "Oh, we're busy right now. Piss off." You would have had a real answer. Like, whoa, that's a serious accusation. You know, let me pass you through to something. Let's figure this out. But this is a clear indication that they're guilty, and there it is right there, right? So just be careful. This is a scam, or to say it in a more defensible way in court, everything about this has the footprint of a scam. All right, let's get to the week. Well, last week saw the return of the Tariff King. I had been saying for a couple of weeks, that's not over. And we have to start thinking about the ego trade and not the taco trade. So he came back last week with a vengeance. You get tariffs, and you get tariffs, and this shiny metal gets tariffs, and drugs will get tariffs. Everything will get tariffs. And the equity market, didn't really believe him. Copper somewhat believed him, but the bond market absolutely believed him. One of those three are wrong, or all three are wrong. Rates for the week, money market rates, all well behaved, right where they should be. And yields rising on the long end, on the 30-year up 10, on the 10-year up 8, even though you had a good demand for the auctions. Didn't matter. Tariffs are going to be inflationary. Let's not even talk about any of the deflationary forces. Let's focus our conversation on only one variable, and let's be very one-sided about it. I think it's wrong. Almost no chance here of a rate increase on July 30th, 6.7%, but you do have growing voices looking for a rate cut, and I think they should. I think there is permission there, and I think I don't know if it's willingly ignoring or unknowingly ignoring the wave of deflation that AI is going to unleash, and just focusing on tariffs, of which the equity market thinks is nothing but a taco trade. So I think they can cut. But 4.7 last week, 6.7, so there is some inching towards it, 93.3% of no cut. We are going to get CPI this week. There's US CPI in 2 days, and followed by PPI in 3 days. This is the 30th, July 30th. The 1st is a Friday. This is a Wednesday. The Powell has acknowledged that there are times where they get some information ahead of time. So it's more than likely at this meeting that they will have the PCE report, and they probably will have the July jobs report, because they do get those when the meeting is just in front of those numbers. They do get an early look at it. So they probably will have those numbers. If CPI comes in light, which I expect it to again, I don't see the inflation. If CPI comes in light, PCE usually follows suit with that. And if the jobs continues on from last month, where the private sector is really not adding much, I don't know why they wouldn't go ahead and cut. We are, look at this, the 3-month to 10-year. We're not inverted anymore. Inverted, then uninverted, then inverted, then uninverted, but up 2. Canadian CPI we get in 2 days. I'm going to have a whole screen on Canada. I think it's time to relook at Canada as I think an outperforming market going forward. I think has the potential to outperform the U.S. Retail sales in the U.S. in 4 days. Export-import prices in 4 days. And we got a lot of Fed speak this week before we go into the quiet period. 4 on Tuesday, 3 more on Wednesday, 3 more on Thursday. Reverse repo, 181 billion. Reserves, 3.34. This is pretty much unchanged. It's kind of like watching paint dry now. I don't know how many more weeks I'm going to continue on with that. TLT gave up 1.36%. SPX gave up 0.31%, and the dollar index up almost 1%, up 0.9% on all the tariff talk. So the dollar index is saying, yeah, maybe we should believe him. The equity market is saying, I still don't believe him. The bond market is saying, we absolutely need to believe him. And the Fed is going to base everything on the inflationary pressure of tariffs, of which the equity market says, are you kidding? That's not going to happen. Somebody somewhere is wrong. Looking at the Fed funds futures, Q3, 18 basis points, sort of almost trying to take out a rate cut there. Q4, 33, still sitting with 2 rate cuts this year. And I think even given the Fed's positioning right now, I think 2 are probably the minimum that you'll get. I seem to think 3 to 4 for the year might be the right place to be. I seem to think that July should be a rate cut, September should be a rate cut. There should be 2 in for Q3, 50 here and not 18. So this is 2. We have 4 meetings left. This is 2 cuts in 4 meetings. Q1's got 22, so 3 and 6. And if you go all the way out to next October, it's got 110 basis points in there, roughly 4.5 cuts in 10 meetings. I think that is a surefire winner for a bet. I don't know that you can go wrong with an October Fed Fund futures. If you get 1 cut, either in July or September, the October, this one over here, would be at 95.92. You're at 95.85 because it's only pricing in 18 basis points. If you get no cuts, you lose 18 basis points. 18 times 41.67. If you're right, you win 7 basis points. Maybe not the fairest trade, but I think it's a safe bet to pick up 7 basis points. The January at 96.17 would be pricing in 2 cuts, and it's sitting at 96.185. I do have a position. What's written in pink is the position I have. I got only 1 over here. I got 9 here, 6 and 5, and this is probably where I would focus more effort on is the October 2026, because I do see more than 4.5 cuts in there simply because Powell won't be there. Trump is not going to take the chance on putting somebody in there that won't cut rates. And while we're on that topic, I don't know if you'll recall, it was about a month or 2 ago when the discussion of can he fire Powell came up. And I said, it is more than likely he'll throw a group of people at it and say, find me a way. And what have they found? Oh, the building. $2.5 billion. Is there something that's been mismanaged? What's he doing? What's going on there? They're going to dig into this guy's life. This is what I has been saying is that, Trump is not somebody you want in your life. He's going to put the pressure on. He's going to start calling them names. He's going to dig up stuff, and here we are. Right? I mean, people do what he wants because you think of the alternative. Do I want this guy in my life? Because he won't stop until he destroys this guy's life. So I don't know what's going to happen there. I think Powell is going to defend himself. I think he's going to dig in. But a fight, he is going to have to engage in. So I think going out to October 2026, that 4.5 in there is a Powell 4.5. You're not going to have a Powell 4.5, so I think that's a safe bet, is to be long the October Fed Funds futures. If you can get, never mind the long end of the curve. Think about this. If you can get the short end of the curve down, right, you can begin to cut a lot of expenses out of the budget, because this stuff rolls over every month, every 3 months, every 6 months it rolls over. You can roll it over at lower and lower rates each time. And stable coins, with the introduction of the Genius Act, there is growing demand for the T-bills, for stablecoins. So what you can do is you could start to push a lot of the issuance over here as rates are coming down, and you could just ignore the back end of the curve. The lack of supply at the back end of the curve will take care of itself. That you're not going to get a 6% 10-year, only because you can reduce the supply of the 10-year by focusing over here. And if you can get the short end of the curve down, you can save a lot of money. The big question is, okay, we can do that, but at what cost? At the cost of inflation. I would answer, what inflation? If you look back over the past 4 months, you already have tariffs in place, quite a few tariffs in place. Show me the inflation. Show me where it is. And you're only looking at one variable. Look at the deflationary forces. Why are we not looking at that? I would say that I don't see a fear of inflation resurging if you get the short end of the curve down 100 basis points by the end of the year. I don't see it. It's already significantly restrictive. And if you can do that and deficit the long end of the curve with supply, lower the supply at the long end of the curve, you could probably get lower yields there, because there are funds that would want those securities anyways. I see a clear path here. And I think the Trump administration has it right here. The guy standing in the way is Powell. However, it's not as if they're absolutely right. Had they never opened their mouth and made this political, I think you probably would be looking at an absolute cut for July 30th, but Trump made it political. He sort of ruined it himself by doing what he was doing. Okay. Not much to see on real yields or OAS. Real yields sort of mixed from the 10-year to the 30-year, over 200 basis points. OAS, hardly any action on OAS. The big move is still nothing to fear in Triple C. Let's make the spreads even tighter. Break-even rates up across all the tenors, because of course tariffs are going to be inflationary unless you talk to the equity market. What tariffs? Mortgages 6.72, up 5 basis points week over week. And this week we get another look at the housing market index, which is a diffusion index. Last month for June it came in at 32, which I don't know if you can push an industry further into contraction. 32 is fairly low. 50 is neither contracting nor expanding. So you can think, in relation to 50 where 32 sits. So we get that on Thursday, and Friday we'll see what housing starts were for the month of June. Corporate bond issuance, we have this data out now from SIFMA for the month of June. IG issuance was 116.3 billion versus 106 for June of last year. 33.7 billion on high yield versus 20.2, 21.55 billion on convertible versus 10.26 in all three categories. Year over year, you've had an increase. For the first 6 months of the year, issuance of U.S. corporate bonds are up 5.2% year to date. as of the end of Q1 2025, which is over here, Q1 2025. Total outstanding corporate debt, 11.4 trillion. Now we can't just add these three to it because you also had maturities happening during that period of time. So outstanding would just be the net between issuance versus maturities. 11.4 trillion, 37 trillion at the federal level, and you haven't even gotten to state and local. Sounds like a lot. That's a lot of debt. Throw on consumer debt as well. Wow. But what we're missing from all of this is the asset side of the balance sheet, because assets, the liabilities fund the assets. And the U.S. has a lot of assets, way more than 37 trillion. Corporations have a lot of assets, way more than 11.4 trillion. Households have a lot of assets, more than the outstanding debt that they owe, which I think is somewhere around 13 trillion on, if you just count mortgage debt. There's another 1.8 trillion on student loans. I think another little over 1 trillion on credit cards. But stacked up against the amount of assets that are owned, some 50% of people completely own their homes. So if you add the asset side, there is no solvency issue at all in the U.S. Yes, it's a lot of debt, but yes, it's a lot of assets. So you can't just look at one side and say that's a lot of debt. You have to also say, well, what assets do you have backing that are potentially backing that debt? And the U.S. government alone, the federal government, does own way more than $37 trillion in assets. Okay, let's have a look at copper. What a price spike on copper. This is a 1-year chart at the top. You can see the move in copper here. To make it more obvious, this is a 2-week chart sitting at the low 5s and then almost all the way to 5. This was 580 before it settled in around 560. I'm looking at the end of August. This is from where we're sitting now. I think this is 45 days to expiration. Usually you don't have a lot of activity on the options, nor a lot of open interest. This was Friday's read. If you go back to, I think it was Thursday or Thursday, and you look at the $6 strike here, there was a huge volume spike at the $6 strike. And this was after the announcement. This is a lot of contracts for copper because this thing just doesn't trade a lot. The options don't really trade a lot. You can see the spread between them, like even at the 6 strike 975 to 1120. That's a fairly wide spread. That's 145 basis points in there, which is at every 1.01 is $250. So you're some $375 on the spread. That's a big spread to cross, right? 375. Now you could put something in the middle of that spread and probably get picked up, but it's just not known for trading thousands of contracts. That's a lot at the 6. There is a belief, with the premium, with the implied volatility having jumped so much, there is a belief that this is going to disappear, and these are really good premiums to have at the $6 strike for 45 days. But this is a 50% tariff. If you have roughly about $4.50 a pound on the LME, they sell it by the ton. It's quoted by the ton, but if you break it down to pounds, it's about $4.50 a pound, which I think is about the right price for copper now. And you're putting a 50% tariff on. That's $2.25. You get to $6.75. Half of that is $1.1250. So that would put you at $5.62, and that is pretty much where we are right now. So the market is pricing in at this point a 50% probability that 50% tariff is going to show up. If it does, this will correct to $6.75 very quickly. You'll get crushed if you decide that, well, I'm going to sell some calls at $6 if you're selling calls at $6, you're making an absolute bet that these tariffs are not going to happen. Personally, I think that's the right bet. I don't think they're going to happen either, but Trump has been called a chicken publicly, and his ego is worth more than you are. So I wouldn't bet too heavily on the taco trade. I'd sort of give equal weight to the ego trade at this point. And copper seems to be sitting in there. Look at the implied volatility, 13-week implied volatility, 95th percentile. That's only because I did this on Friday. Had I did this on Wednesday, these were all 100%, all 100%. IV has fallen from over 40%. Thursday, beginning of Thursday, was a little over 40%. By the time we ended Friday, we're under 40%, 30 some percent. So IV is drifting away, because at the same 560, where this is pretty much where it is, at the same 560, the premiums, I was watching the sixes, the premiums in here were almost 0.15, and here you're down to, I'll call it 0.11 at the same level, only because IV has dropped down, but still quite high. And to be over 40% on a copper contract, that's incredible. I have sold puts. The very next day we had a drop down, and this doesn't disappear very quickly, so I sold puts because the IV was so high. I used the XHE contract, 45 days to expiration, and this is from today, so this is the options chain from that. I sold 490, 480 puts, although I do not see that I would keep them open past August 1st, because if these tariffs are not going to be there, this will converge to the LME pricing rather quickly, and you'll probably get back to, where are we here, this 450 level, you'll probably get back to maybe in this range, 450 to 475 on copper. So careful. That's going to be a risky bet. Is Trump going to do the smart thing, or is he going to do the stupid thing? The stupid thing would be protecting his ego, unless he can protect his ego somewhere else. This 50% tariff, it's on all copper imports, so copper product. So if you're bringing in a finished product like wiring or copper piping, tariff, just finished copper cathode is on there, and semi-finished copper as well. This is for national security issues. He said the dependence on Chile and Canada poses a strategic risk. Really? The dependence on Canada poses a strategic risk? Really? From a transactional person, everything is a risk. From a relationship-based person, Canada is not a risk. Canada is your source of supply. If you're looking at your strategic assets, you would say, look, our money is better spent in investing in these sectors, because Canada's got our back when it comes to copper. We don't have to worry about that. But if you're a transactional person, everything is a risk. Every relationship is a risk. And that's what you have. You have a king that is purely transactional. U.S. imports make up about 50% of the U.S.'s need. Imports about 810,000 metric tons. Domestic production is about 850,000 metric tons. Of the 810,000 that comes in, Chile provides 51%, Canada provides 31%. I believe this is covered by USMCA, and the threatened tariffs on Canada are for non-USMCA compliant product. But he could, just because of national security, just say, well, no, even if it's within the USMCA, it will be subject to a tariff as well. Chile is an odd one. U.S. has a trade surplus with Chile, and you kind of need the copper anyways. And even if you put it in place August 1st, what you are guaranteeing is that Americans will pay the highest price in the world for copper, just when they need to expand data centers and and the electricity grid. Let's make the one material they need the most expensive in the world. So I say this is really stupid. I don't say stupid. That's with a U. Listen to the difference, right? This is stupid. This is stupid. Do you hear the difference? Right? This is stupid. Really stupid. He's got to know that. I say that in a very hopeful way. He's got to know that, right? Right? Because this is probably the stupidest tariff I have ever heard. This is a base for everything you need. Everything you're talking about, you're going to need this. You want to make electric vehicles more expensive? You already did by canceling the EV credit. This makes them more expensive. You want to make housing more expensive to build? Not only are you thinking about tariffing lumber and getting rid of most of the construction workers at the southern border, now you want to hit copper. You're just going to make housing even more inexpensive. You want to build out all of these data centers. You want to be the center for AI. The amount of copper that's in this is as stupid as you can get on a tariff. So if I had to pick, I'd probably say this is not going to happen, that something will show up by August 1st and this will disappear. However, his ego. Now, if you want to test his ego, tell me what side of the bet that you would take on this trade. You're going to die. However, Trump can save your life, but it would cost him a hit to his ego, but he could save your life. It won't cost him any money, just a hit to his ego, but he can save your life. Or he can let you die and his ego would be intact. Now, whether you like the guy or hate the guy, I want you to answer as honestly as you can. It's you that are going to die. What side of the bet would you take? I know what side of the bet I would take. And just to finish up from that last screen, I say that so that you can put that copper trade in perspective, because I think it really comes down to that. Is this a taco trade or is this an ego trade? I wouldn't dismiss the ego trade, is what I'm saying on that one. I wouldn't dismiss that at all, which means that $6 call could be very risky. Let's move over to Canada. And with the announcements this week from Mark Carney, I'm getting more and more impressed with this guy. And I think we are witnessing the return of classical liberalism. This is the type of liberalism that won elections, which is socially liberal and fiscally conservative. I don't think most people have an issue with who you want to be, what you want to believe, who you pray to. Most people don't have an issue with that. Where people have an issue with it is in two ways, where they're demanded to participate in the same belief system, or they're told that they have to pay for that lifestyle for other people, right? Fiscally conservative, make sure we, be who you want to be, but don't send me the bill. And socially liberal, which means you do you, but socially liberal means you let me do me. You can't be a social dictator and make everybody pay for it. That was Trudeau. That was why his brand of liberalism forced everybody to the right. Whether they wanted to be there or not, it forced everyone to the right. But here, Democrats in the U.S., take notice. This is the way to be a liberal. Let's see what he has done. Last week, he said, we got to get rid of some rules. He ordered all his ministers to go through the departments and say anything that is a duplication from the provinces, get rid of. Anything that causes delays, get rid of. So he is on a deregulation run here. That is pro-growth. Of the new spending he announced, 2/3 of it went to infrastructure. That's $80 billion to $100 billion in infrastructure spending. That is pro-growth. To put all these numbers in perspective, the U.S. is 10 times the size of the Canadian economy. So imagine the U.S. Congress saying, we're going to do an $800 billion to $1 trillion infrastructure spend. How bullish that would be. Just to put it in perspective, because sometimes we look at 80 to 100 billion, we get so used to the U.S. that we look at 100 billion, we think, 100 billion, is that it? It's nothing. Microsoft spends that just on data centers. Come on, that's nothing. Multiply that by 10 just to get it to the U.S. level. $25 billion cut to spending. He said that this week. He gave all his ministers a mandate saying, I need cuts. You go and you need to cut. We're bloated. We know we're bloated. Enough is enough. Let's stop spending this taxpayer money here. There's the fiscal prudence, right? There's the fiscal prudence. Middle class tax cuts. That is pro-growth as well. I would like to see the upper tax rate. I'd like to see legislation that says no upper tax rate should be a majority of a person's life. Because the upper tax rate if you live in Ontario, is 53.5%, making you a minority shareholder in your own life because the government owns 53.5% of it. And then you get the privilege of paying all the luxury taxes when you get to spend what you have left over that other people don't have to pay. 33% sales tax. I would like to see him bring that top rate down. Don't have to give tax cuts to the most successful. Do the middle class tax cuts because that does affect the upper levels as well because it changes the range of the income. So it does give some tax cut to everyone that is middle class or higher, but I would still like to see him say, look, 53.5% is stupid. Or should I say stupid? We got to get that down to 49%. Otherwise, we're going to continue on having capital flight. Let's get that down to 49. That would start being some nice steps. But middle class tax cuts, a liberal cutting spending and cutting taxes. I want you to think about that for a second, right? That doesn't sound like a liberal. At least in Canada, that doesn't sound anything like what we've had before. We'd expect the exact opposite. Removal of inter-provincial trade barriers. That is pro-growth. And I do think that the globe is entering into a commodity super cycle with just the change of everything that has to come up. Over the next 15, 20 years, we're talking about replacing the fleet of vehicles, more than likely electric or plug-in hybrid robots. You want humanoid robots walking around. That's going to require a lot. You got to make them. Everything that's made that has physical presence requires a commodity somewhere. Everything that has physical presence. You're going to expand the grid. You're going to make it a green grid. Well, you build windmills, you need raw materials. Anything physical. So I do think we're going into a super cycle only because of the lack of investment over the last 10, 15 years, call it 15 years really. And Canada has nothing but commodities. We're just huge in commodities. If you want commodity exposure, there really are two stock markets in the world that will give you heavy commodity exposure. That is Canada and that is Australia. Australia, I think 25% of their equity index is commodity exposure. In the US, it's low. It's like 4%, 3%. It's really low. The materials sector in the US is really, really small, which adds to my statement before about tariffs on copper being really stupid, right? Look at Canada's jobs report, 83,000. Now remember, we're 10 times, the US is 10 times larger, so multiply that by 10. What if the US had a jobs report of 831,000 jobs? What would you say? Just to put it in perspective. The jobs report comes out and the establishment survey says 831,000. You would think, whoa, come on, that can't be right. 83,000 is huge for Canada. Unemployment dropped to 6.9%. Participation rate increased to 65.4%. Average hourly earnings 3.2%. That's year over year. It was 3.5. So you're not getting the inflation in there. You're getting great job creation. Deregulation, pro-growth. Infrastructure spending, pro-growth. Cuts to spending, beautiful for fiscal prudence. Middle-class tax cuts, pro-growth. Removal of inter-provincial trade barriers, pro-growth. And if I'm right about the commodity cycle, Canada is a clear winner here. I mean, what's not to like? This is the way to run a country with this type of ideology. So I was skeptical of another liberal victory, only because you had how many years of illiberalism, of social dictatorship, and forcing you to not only participate in everyone's belief system, but to finance their lifestyle as well. To, hey, enough of that. What's not to like about this? This is a chart of the Canadian, it's the CAD, which is the futures. This is a 2-year, sitting at 73. This is 73.390. If you want to know what the US CAD is on the exchange rate, it's 1 divided by 0.73390. You'll get to about 1.3680, somewhere around there. There is a consensus growing among the Canadian banks that by the end of the year, we could see 78 cents to the dollar. That's 6.28% in 6 months. Doesn't sound like a lot, 6%, but currency trades are highly levered. That would put the US CAD at 1.282 from 1.368. A long position in CAD futures pays in US dollars, so the P&L is in US. If you're long one futures contract, just to show you the power of the leverage here, it'll cost 73,390. Well, I shouldn't say it'll cost you nothing. You get exposure to 73,390 US negative. You have a short position here and a long position here. So you're long 100,000 in Canadian dollars. You're short 73,390 in US dollars. Your margin in Canadian dollars is roughly about 2,500. By the way, this would be your margin if you did a spot trade, and a spot trade isn't going to be as effective as a futures trade. If you're in US, your margin is 1786, 461 pip difference between where we are now, the 73,390 and the 78. That is a profit of 4610 per contract. 146% return based on the margin that you would have to put up. 146% from a 6% move. That's the power of leverage. However, you will have to roll. This is the September contract here that's sitting at 73,390. At September, you will have to roll to December. And the roll is 21 pips. So that's going to cost you $210. So you're not going to get 4610. You're really only going to get 4,400 off of that, because there's the September, there is the December. So you can see what the roll is going to cost you. It is better than a spot trade, because here's what happens on a spot trade. If you do 100,000 spot trade, you're still going to need, if you're in Canada, you're still going to need the 2,500 in margin. And if you have Interactive Brokers, what you'll see in your account is your Canadian balance will have increased by 100,000, but you'll create a negative US balance of 73,390. So if you look at your currency balances after the trade, that is what you're going to have. This 100,000 Canadian, it is cash, so you are going to get the cash rate that IB pays, which is about some 50 basis points lower than the market, than what you could get if you placed it somewhere on your own. You're going to get about 50 basis points cheaper, but you're going to pay the cash rate on the US, and I think they add 125 basis points on for this. So you have an extra spread of 175 basis points in here, but in the futures, you have the interbank rate. You have SOFR rates that are built right into the futures, so you're actually getting your US, your financing costs on US are 125 basis points lower, and your return on the Canadian is 50 basis points higher by doing it in the futures. Even if you hold dollar balances and you say, well, I won't have a negative balance, I can do the trade myself, your US dollar balance is still going to drop by 73,000, and your Canadian balance is still going to increase by 100, which will still earn 50 basis points less than cash. And here, because you are giving up income on the 73, you are giving up the US income that you would make, which would be the rate minus about 50 basis points as well. You're not going to get a better interest rate than you can get in the futures, because the futures is priced out with an interbank rate that you cannot get. So it is the best form of trade, is the futures trade, even though it has carry. It has explicit carry. You still have carry here, except you don't really notice the carry because you don't have a price tag. Here it gives you a price tag so you can see the price of carry, but it is the cheapest carry you're going to get. So I am currently building a long position in CAD futures. On any weakness, I'll continue to add to that position. This is a 2-year chart on the Canadian. We can see, 2 years ago up here, this is pretty much at the 77 to 77.50. This is October of 2024. Here is the Trump victory. Yay, Trump won, and oh my God, Trump won. And oh, look at this. Looks like we got a V. Is the Canadian market subject to the technical analysis pattern of the V? Looks like it is, right? Anyways, that's sort of my position on Canada. With all of this going on down here, with what Mark Carney is doing with his pedigree, ex-Goldman Sachs, ex-central banker, both of the Bank of Canada and the Bank of England, I would say if you want to put Trump on one side of the table and Carney on the other side, Carney would out-negotiate him, I think, like child's play. Okay, SPY. Really, nothing to see here. It says on Thursday hit an all-time high, 626.31. Last Friday you had tariff announcements. Saturday, Sunday, Monday, Tuesday, Wednesday. The market just kept saying, we don't believe it and we don't care. Only Friday with the Brazil statements did they care. And then after the market closed, Mexico and Europe were up for their round of punishment, or at least their round of threats. And the S&P finished down less than 1%, but still at 623 is still sitting near its high, 626.31 all-time high. We're just a little bit below that now. Forward 4-quarter operating earnings sitting at 280, closing SPX at 62.59. That's 22.35 forward earnings versus 22.43 last week, pretty much unchanged. Implied volatility, pretty much unchanged as well at all the 3 time periods. IWM 221.70, down a bit. IJR 112.42, triple Q 554.20. It had an all-time high on Thursday as well of 556.25. And let's add 1Q. This is the 100. This is the NASDAQ Composite. Hit an all-time high as well on Thursday of 81.57, sitting at 81.19. This is a composite. Why am I putting this in here? This is very bad options. You pretty much are just buying or selling the underlying at 81.19. Anything that's IPO'd on NASDAQ, on that exchange, will within a few days be added to the NASDAQ Composite, but will not be added to the NASDAQ 100. So if you are expecting a wave of IPOs to hit the market and the AI frenzy and craze to continue, the 1Q will give you an advantage. Just to give you an idea of how they track against each other, here is triple Q, here is 1Q. Year to date, triple Q has outperformed 8.69% versus 6.84, but 1 year, if you go back from today, 1 year, 11.02 versus 10.8, 1Q outperformed here over longer periods. But we did have a hollowing out of the IPO market post-COVID, and then once interest rates started going up, we had a bit of a hollowing out. Only recently have we really start to see IPO activity pick up. 3-year period, 91 versus 82. Yeah, outperformance, but not by a large part, and this is mostly because of the lack of significant IPOs. 5-year 116 versus 103. So NASDAQ is performing, but not by such a wide margin that you'd say, oh, I don't want to see this. And over the last year, there was some outperformance because you did have some significant IPOs in here. If you expect the IPO market to heat up, you had a lot of money right now in VC land going into AI startups. In fact, it's nothing but AI startups. This was what .com was If you didn't show up to a VC with a .com business, they weren't even looking. Their portfolios were going right into that. Portfolios today are pretty much going into AI. This is big. Well, they got to either be sold to a company through an acquisition, or they have to be IPO'd, one of the two. And if you want to pick up the IPO activity, it's probably not going to show up here, but it will show up in 1Q. And it's accessible, right, at $81 a share versus $554. Great options up here. No options. There are options listed, but there's no volume, and the spread is really wide, to the point of saying there are no options. Really, you're really just buying it. Would be nice to be able to buy calls on it, out of the money calls, or create synthetics, but on this one, I'm afraid you got to just buy it. We have earnings this week, and because there's more than one company, it's going to be hard for these two companies to agree. 37. No, there's 42. We'll follow Sector Spider and we'll see which 42 they have. But I've gone through it and I can see where they do sort of disagree on some things. Not only do they disagree on the number of companies that are reporting, obviously they disagree on the names, they oftentimes disagree on the date on which those companies are reporting. Is this really so hard to do? That these big companies that are into this just can't get it right because it's so bloody difficult to get done. I can't believe that. But here we are. And then I'm going to show you this site here, Reed Smith. If you're wondering, well, where are we on tariffs with all the countries around the world? Let's have a look at Reed Smith, and it'll give you some idea. Japan, Korea, some of the bigger ones that were announced over the past week, 25% on each one. Mexico and the EU, 30%. Canada, 35%. Extra punishment for Canada. Brazil, 50%, but Brazil hit back and said, you hit us with 50, we're going to hit you with 50. So we're going to visit sectorspider.com. We're going to visit Reed Smith, and I subscribe to Grok 4.0, and let me give you my assessment of that. Okay, Monday, Fastenal. This is now, it's going to be wrong. I'm sure as I go through this, you can say, well, that's, they report this date, not that date, and you forgot this company. Hey, take it up with these guys. Right, I'm just repeating what they have on their site. Monday, Fastenal. You're going to see a lot of banks this week going into Tuesday. State Street, Bank of New York, BlackRock, Citigroup, Wells Fargo, JP Morgan. Huge XLF risk there. I don't know that there is anything in the last quarter that I would say we got to be careful for this or be careful for that. I don't see them missing. I don't see big disappointments. I don't see a catalyst to the downside on this one. In fact, probably more to the upside. Wednesday, let's just order the sectors so you can get a good look at all the financials that are reporting. M&T Bank, Progressive, PNC Financial, Bank of America, Goldman Sachs, Morgan Stanley. There's a lot there, right? Industrials, JB Hunt, United Airlines, Prologis, for distribution and warehousing in the REIT space, the largest, Prologis, Johnson & Johnson, Las Vegas Sands. On the 14th, Citizens, Fifth Third, U.S. Bancorp, Travelers, another insurance company there. What do we got in the industrials? GE Aerospace, Snap-on, Cintas, Seagate, a little technology creeping in here, and Staples, you've got Pepsi. And Friday, Netflix, I think that's wrong. Usually they're like Thursday nights, so I would seem to think this should bump into the night before. Schlumberger, and even more financials here. Huntington, Charles Schwab, Regions, American Express, Truist. There's 3M, Industrial at the bottom. You can peek into next week, and you can see you're well over 100 in the next week. That's a big week, and the week after, well over 100 as well. That is a huge week going into the end of July, beginning of August, and that's a big week as well because you also have the central bank. You also have August 1st, which is the start of the tariffs. Lots of risk coming up. Let's have a look at the state of tariffs. Okay, this is Reed Smith. The site is called TradeComplianceResourceHub.com. There's not a friendly name to advertise, eh? TradeComplianceResourceHub.com. You can think of it like TradeComplianceResourceHub.com. If you can write a jingle for that, but if you just Google Reed Smith Trump tariffs, I'm sure you'll find it. And here you are. All the countries you can well, that's all every single country. So if you're interested in knowing what's going on, Algeria delayed until October 1st, effective July 7th, 30% all products. Angola announced July 7th, 32%. Austria not yet. Bangladesh, Belarus, small little countries. There's Brazil, threatened to start August 1st. July 9th announced 50% on all products. Just to get the columns, this one here is additional information and countermeasures announced. So where are we on Brazil? Oh, that's Canada. There's Brazil. Countermeasures, July 10th. President Lula pledged to impose a 50% tariff on U.S. origin goods if the United States proceeds with its threatened tariffs. Not going to be pushed around on this one. And Brazil was wrapped up with sort of a personal request by the king that this other deposed king that's like me, you got to leave him alone. Don't take him to court, otherwise I'm going to really punish you. Using the office for that kind of thing. The BRICS threatened July 7th, 10% on all products. This is the last time was January 30th, 100%. Brunei, Cambodia, Cameroon, Canada. Where are we here? Threatened on June 27th, and oh, that was March. This is the most, where's the most recent one? 35% somewhere. There it is. Threatened rate increase July 10th. President Trump announced that goods currently subject to the 25% fentanyl tariff will become subject to 35% tariff on August 4th. And here are all the reciprocal tariffs that Canada has on the U.S. And you can just go down country by country and see what's there. It is the most comprehensive list that I have found out there for everything. Although it's a little sloppy. Like, you know, I mean, you gotta read each little thing. It's kind of messy in that way. Okay, let me give you my assessment of Grok 4.0. I subscribed to it. It was $300 US. And let me tell you what I use models for. I have subscription to almost all of them now because I need to see where they are and how far along they are in terms of the ability to replace me. And I'm finding that it cannot, none of them can replace me. They can do a lot of the work that I do, but the difference, the part that I add makes all the difference. That if I was not in the process, the output of these models for what I do would be zero. So these are not employees. I can't just hand them tasks, off they go, and I can publish whatever work they get. They're working partners. So, for example, when I'm doing a sub-industry report or a sector report, I can get the LLM to write one, and it's okay. It's what I would expect from an average employee doing average work. It's okay. It misses a lot of the real big picture or the nuance or the detail that's really important. I do find that if I use their references, this is what saves me a lot of time, is get them to do something and ignore their output, but just go to their references. They're fantastic. So I then write in bullet points. I no longer write in paragraphs. I'll write in bullet points. And I used to make notes and then write. Now I just make my notes, write in Word, I write in bullet points. Then I give my bullet points to the LLM and I say, write me paragraphs. That's where it saves me a lot of time. You see, it's a partner, not an employee. Now it doesn't write in my style, but that's okay, because when I read what it gives me using my bullet points, I think, you probably wrote that better than I could. I'll give it to that it's probably a better writer than I am, especially when it comes to punctuation and grammar. I think it's a better writer than I am. So I use it for that. I use it to help me write multiple choice questions. And it gets me, Gemini gets me about 80% of the way there. But no question is perfect. And out of every 10 questions, 2 on average will be throwaway. 2 to 3, you just throw away. Of the ones it writes, I think, okay, it's a good question setup. Option A is good, but B and C suck. Or option A and B are okay. I can upgrade them a bit. Option C needs a rewrite. It has taken my writing time from about half an hour a question down to about 10 minutes on average. Gemini is my go-to model for this one. My prompt is like a page and a half long now. It is a long prompt. And I get very close to what I need, but I can never just give it the instruction sentence and say, go off and do what you want, and then write an agent where it writes questions, and then another agent then publishes the questions on the site, and I never need to check them. That would be ridiculous. About a year and a half ago, 2 years ago, year and a half ago, year ago, I had a subscription to ChatGPT, and as I was using it, I always got to the same conclusion. This is not ready. It's not ready to do what I need it to do. It's not like it's getting me 80% of the way there and I got to finish the 20. It's not even getting me there. That what it's giving me, I can't even use as a start off point because it's so far off the mark, so I wasn't going to use it. Welcome to Grok. That's where Grok is. Grok is not the most advanced model. In fact, of the prompts that I gave it, that I've given other models, it has performed pathetically. I have a hierarchy of models that I use. Gemini is my go-to. Manus is my second one. I'll always give OpenAI another opportunity to prove itself, but it is far below what Gemini and Manus can give me. If I'm doing just internet search, I use Perplexity. I don't even use OpenAI. In fact, I don't even understand why everyone is so enwrapped with OpenAI when there are better models out there. If you're going to spend $25 a month, do it on Gemini, because you get a whole bunch of things with Gemini. I would just stay there. Claude, I see no purpose for. Now, it might be very strong with coding, but I just don't do any of that stuff myself. For what I do, Claude is the lowest. Grok comes in well below Claude. Grok is where OpenAI was 2 years ago. That I look at the output, I say, you're not even close. So let me just show you some of the things it did. Since Friday, July 4th, this is my prompt. Trump has announced new tariff rates on various countries and goods that will begin on August 1st. Can I have a list of the announced tariffs since July 4th up to and including July 12th? And Algeria to Cambodia, and then it just stopped. And that was it. I said, what about copper? What about Canada? What about Mexico? What about the EU? Wow, you're not very good at this. I think I just wasted $300, kind of hit it where its pride is, see if it has any kind of pride. Then I said, okay, here's copper, here's Canada. Again, you ask this question, you get stops at Cambodia, you say, copper, Canada, Mexico, EU. Okay, here's copper, Canada. Well, where's Mexico in the EU? Come on, man. I said, you're really bad at this. And then I tried to embarrass it. Perplexity is better. Gemini is better. OpenAI is better. How do I get a refund? And it sends you over here to get a refund. And so I wanted a refund. I'll show you some other things I tried. And I didn't just do this and decide I want a refund. This is at the end of it. I used it for a couple of hours and I thought, this is crap. This is the message you will get back. If you need support for Grok, you can access faster assistance via the in-app help center on grok.com or the Grok mobile apps. By the way, you're going to dig around to find out how you can contact them. They don't make it easy. You got to dig around to find out how, and then when you contact them, it's not an easy form you fill out. They want to open your email or open your FaceTime, but you got to jump through a whole bunch of hoops to set that. It's not easy. Please note all payments are non-refundable, except where required by law. So there are only two instances really where you're going to make something non-refundable. Instance number one is where you complete the majority of the delivery on payment, such that giving a refund would be senseless because you've already delivered. So let's say it's a movie that you buy and you download the movie and you watch the movie, you say, this movie sucks, I want my money back. Sorry, but we've already delivered it to you. If we gave refunds, we'd be in the business of giving refunds. My education site for CFA offered no refunds because we did for a while offer video download and then we got rid of the download. But if you were clever at programming, if you were clever at code, you could download the videos. Because you could, we could not offer refunds because for one country in particular, we would have been in the business of giving refunds. So you can't. Once you deliver the product and you can't retake back the product because it's in digital format, you can't offer refunds. The other instance in which you offer refunds is when you know something is garbage and you're selling garbage, you can't possibly offer refunds because you're just going to end up giving back most of the money that you sold. This is just an interface. You're not downloading any model, anything. It's just an interface. There is no reason to take a position of there are no refunds unless you know that the amount of refund requests you're going to get are off the charts. And it didn't take me long before I wanted a refund. This is part of a trend that has really shown up in the last few years with Elon Musk is the massively overpromise, massively underdeliver. Full self-driving, still not there. Robotaxi, that was a massive underdeliver. The robot, overpromise, underdeliver. You can buy it, but it's nowhere near what it's supposed to be, and it is not the most advanced humanoid robot in the world. Grok. Why did I pay the $300? I listened to the All In podcast where they talked about it, and they talked about it in such glowing terms. I thought, okay, well, I'll give it a try. Not recognizing that Musk is their friend and they are all investors in OpenAI. So of course they're going to tell you it's the most advanced model in the world. I feel I got duped and conned into this. It is garbage. It's at least 2 years behind OpenAI, a year and a half, 2 years. You can get it to show its thinking. And what you're going to find when it shows its thinking is it favors X, the old Twitter. Searching X for this, searching X for that, searching X for this, that it favors it very, very heavily, and its output is not very good. Here is my prompt when I get its right questions. I have a very long prompt for questions, and then it writes questions. These are almost unusable. So the questions are meant to be, you have 2 premises and 3 conclusions, and they're not supposed to be, dumb in a way that somebody with no experience can answer them. So our premises here, material sector companies are under increasing regulatory pressure to adopt sustainable practices, particularly in reducing greenhouse gas emissions. That's premise 1. Premise 2, industrial gas producers as key suppliers are strategically positioning themselves to support the global shift towards low carbon. Based on these premises, which of the following is the most likely conclusion? They should be thematically cohesive. That's the big instruction. Thematic cohesion. Gemini gets it when I say thematic cohesion on the answers. Look at the first one. Narrowed its full year earnings per share guidance to reflect growth driven by strategic investments. I mean, just looking at the premises, that is not a logical conclusion. It doesn't take more than a first-year logic student to say that's not it. Lynn has achieved consecutive annual dividend increases, marking over 3 decades of such adjustments. What does that have to do with the question? That's not even thematically cohesive. So obviously you get to see, because the answer is being telegraphed. And in my prompt, I specifically say thematic cohesion is key, right? And they're all like that. And some of them are lies, by the way. One of the instructions is all the conclusions must be true conclusions. They must be true statements of the company, absolutely true statements. Grok makes up things and lies. Not only does it ignore the instruction to make them true, it actually lies. So that when you read some of the options here, some of them are just lies. They're not even true about the company. Well, the idea behind the questions here is that you don't have to be an expert in the company. You have to understand inductive, deductive, and abductive reasoning. It's meant to build those particular skills, and it fails. It fails at this. So I said, not even close. And I wanted to embarrass it. Gemini's much better. Let's look at question 1. Your 3 answer choices are not thematically linked with the premises. Option B is just completely off in left field. I thought you were supposed to be a superior model. Tell me what went wrong with you to see if it has any self-reflection. And it did. It recognized. I was, when I read this, I say, okay, I'll work with you. And it came out with reasons what went wrong. Option A. This is somewhat linked, as strategic investments could imply sustainability-focused ones, but it's too vague and financially oriented without explicit ties to emissions or low carbon. Good. Option B, this is the big offender you called out. It's completely detached. Exactly. Option C, this one fits well. Of course, it's the right answer, but you telegraph the answer. So it says broader issues with this process. It recognized what went wrong, and I thought, well, if you can recognize what went wrong, you should be able to fix it. I say, okay, I'll redo these 5 questions. Let's see what we get based on your current understanding of self-reflection, and not a chance. As we go through these, not a chance. Didn't even get closer. So I give the same prompt to Gemini, and I get really good output. Let's go back to the Tariff one here. I get really good output. Now, I gave it a whole bunch of other prompts. I gave it some bullet points, and I said write a paragraph. And it wrote a paragraph, and it missed one bullet point altogether. So I had to say, you missed the point about this, rewrite the paragraph. So it did rewrite the paragraph and decided to ignore the other bullet points and just wrote a paragraph on that bullet point. So I had to delete it, gave it the 5, and I said, how many bullet points do you see? I see 5. Write me a paragraph that includes these 5. And I got a paragraph that had 4. It's not ready. It's so bad that to use it any further would be, well, why would I when I have Gemini? Now, I had Starlink. I bought Starlink, and I returned it after 1 day because I thought, if I have a phone that has bars, I'll get faster download than I can with Starlink. It generally sucks. The algorithm you would use with Starlink is, if I have nothing else and I have no alternative and no chance, okay, Starlink. But if you have access to anything else, Starlink sucks. If you have access to anything else, Grok sucks. And I'm going to say this about robotaxis. If you have access to any other robotaxi, I'm absolutely certain Tesla's robotaxi sucks. This is a pattern of hearing him talk about the stuff, and you think, wow, that's incredible. But when you actually use it, the truth on the ground is, this sucks. This is nowhere near the hype. Now, I'm out $300 on this because I don't see why I would waste my time using this. So if I can save you $300, I think that'll be helpful. If you want a great model from a great company that's going to continue to be around, that has access probably to some of the best data, it's Google. Why their stock price isn't reflecting more of this is more likely tied to the fact that they're probably going to lose search, that they're going to have to do, I think, something with AI search and something with an AI browser, which I think they're well positioned to do right now. I think Perplexity has an advantage. Perplexity with Apple should be a terrifying thought for Google, so I think that should push them. But we haven't even seen DeepMind yet. And I am more than willing to pay the $340 a month for the AI Ultra. As soon as the 2.5 Gemini includes DeepMind in the AI Ultra, I will pay for that. When you have Gemini, you're going to have much higher limits on Notebook LM. You still have Google AI, you have or AI Vertex that you can use. You have much higher limits on Gemini. I haven't even hit my limits yet. I asked where the limits are, and they're set. All I get is they're set very, very high. I use it a lot, and I haven't even hit those limits yet. When I give other models the same prompt that I give Gemini, Gemini by far, Manus is second place, but still Gemini leads out. OpenAI, Claude, they're not even in the race. Grok is way back there. And I should have monetized this video to see if I can earn $300 US on this video to make my money back from what I've lost. I've canceled my subscription, so they're not going to recharge me again. So that's it. I only get to pay I only have to pay for 1 year, but there are no refunds, not because they're delivering anything to you, but because they're delivering nothing to you. You can't offer refunds when you deliver nothing, because you will be in the business of issuing refunds, and they need money. So they're going to get it from their customer, and I don't think they're going to feel bad about it one bit. Don't waste your money, people. Okay, before we end today, I just want to show you some additions that we've put in sector studies. We've got, I think, consumer discretionary, consumer staples, and materials are the three that we've completed so far. So if we click on consumer staples, when I say completed, we have the readings up. So they're all in different sections. There is the introduction to the consumer staples. Core economic characteristics, if you click on that, non-cyclicality, demand elasticity, and then I give you some examples from companies that talk specifically about the elasticity of demand for their products. Coca-Cola, Kraft Heinz, General Mills. So there's seasonality here. We have General Mills and Kraft Heinz. Colgate, I put in there as well. Dividend payouts. Give you examples from Colgate, Coca-Cola, Procter & Gamble, Walmart, Kimberly-Clark, Philip Morris on just the amount of dividends they pay. If you look at Procter & Gamble, 68th consecutive annual dividend increase, 134 consecutive years of paying dividends. So all the sections are on the side. I'm going to do it for all the sectors. So we've got 3 of the readings up for the sectors so far. Also, adding to the question bank, if you have the applied level and applied analysis for sector studies, you could see consumer discretionary, consumer staples already have their questions up. There's 190 questions in here so far, trying to target about 100 questions per sector. And then I'll be writing questions at different levels as well, not just the sector level, but the industry group, the industry, the sub-industry, and the company level. I'm halfway through the materials questions now, a couple more days to get those done. But let's just have a look at consumer discretionary, and I'll just show you the 2 types of questions. We have basic questions like this. If you're a CFA candidate or past CFA candidate, you'll recognize the question with the 3 choices. So we have basic questions like this, and we have questions which combine a company with reasoning. So this is a question about Chipotle, and you'll have 2 premises and a question, and you have to determine the conclusion. These questions are meant to do three things. Number one, teach you something about the company that you didn't know. It should be possible to answer this question without knowing anything about Chipotle. It's telling you something about Chipotle in the premises. Then it asks a question and it asks for a conclusion. You can answer it based on, oh, I know this, or you can say, using a particular type of reasoning from the premises to the conclusion. I can tell if the premises are specific and I need a general conclusion. If the premises are general and I'm looking for a specific conclusion, that's a difference between inductive and abductive reasoning. And we want to develop your reasoning skills because this really is where LLMs fall apart when you get to higher level skills like critical thinking and reasoning. So this gives broad premises. Consumer discretionary brands with strong pricing power must still carefully balance price increases with tangible investments in the customer value proposition. Key component of value proposition in the restaurant industry is service quality, directly linked to employee satisfaction and retention. Which of the following disclosures from Chipotle most completely illustrate this strategic balancing act? All three answers are actual disclosures from Chipotle. They're not lies. It's not as if, oh, A is false, and you would have had to have known that about Chipotle to know it. The value in these questions is that all the answers must be real statements, but only one of those real statements is a logical conclusion from the premises. You get that? It's not as if which is true, which is false. Is which is a logical conclusion based on these premises. Grok wanted to give false answers, and it's like, no, you can't. They must all be true statements. Otherwise, you can't learn something about Chipotle. So you have to walk away from this question saying, I know three statements about Chipotle I didn't know before. I developed some of my reasoning ability by going from general principles. You'd recognize these as general, and since this is the company, you'd recognize this as specific. So you're deductively coming to your answer, and that's the goal of these things, right? Here's one about General Motors. Here's one about Darden Restaurants. There's Chipotle again. Here's just a general one about consumer discretionary. So there's a whole bunch of questions in here, and I am trying to put as many companies in here as I possibly can. As we get down to the sub-industries, they'll be more related to the company because you start getting closer and closer to the company. And finally, what I have here, this is in our test center. It's not made live yet, but I'll show you what we have is infographics. Remember what I said earlier, I write in bullet points. And then from those bullet points, I'll give it to Gemini and I'll say, write me paragraphs. So let's just look at consumer discretionary here. These are infographics. Number one, fundamentally cyclical. For consumer discretionary, if you had to say one thing about that sector that an analyst should know, what's the one thing you would say? The biggest thing you would say is it's a cyclical sector, right? It's not a defensive sector like consumer staples. It's cyclical. And there's usually one or two big points that you can make. So if I'm writing out bullet points, those are my points. There's no need to go on for 5 pages about how it's cyclical. Once you get that it's cyclical, you get that it's cyclical. There's plenty. I can write a whole book on all the evidence that it's cyclical, but I'm just beating the point to death. So usually with every paragraph, there's 2 or 3 big points you want to make. I put them in bullet points and then I give them to the LLM and say, write me a paragraph. Well, I think if I'm giving it to the LLM to say, write me a paragraph, am I not just giving it the prompt? And if I'm giving it the prompt, why don't I give you the prompt? So that's what these infographics are. Fundamentally cyclical. If you say, well, I know that. Well, let's say it's in a book, in a reading, and it goes on for 1.5 pages about fundamentally cyclical. You think, do I need to read that? I mean, I already know it. This allows you to say, I'm going to build my own reading, the reading I want, the reading which is the lack of knowledge that I have, by just saying, okay, well, how about number 2, number 4, and number 8? Well, there are your prompts. Give the LLM prompt number 2, give the LLM prompt number 6, and give the LLM prompt number 8, and ask for a paragraph or 100 word or 200 words on each of those points. There you go. You don't need to read 40 pages if you say, I already know 25 of these 40 pages. you only have to create the reading you want. So these are the prompts that you would use. So I thought, why not just put it in infographic form? And then you can determine how long of a reading you want by saying, with respect, and here's how the prompt would go, with respect to the consumer discretionary sector, comma, tell me more about, quote, copy this whole thing, end quote. And you can tell it, write a 200-word report, 300-word report, whatever you want, and it'll tell you. It'll tell you more just about the things you need to know, as opposed to me writing out endless paragraphs about it. I'm following a 100-point system on this one to get you to know any company 60-70% of the way there in 100 points. Here's how this works. Every company is in a sub-industry. Every sub-industry is in an industry. Every industry is in an industry group, and every industry group is in a sector. So if you go top down, give me 10 points I need to know at the level of the sector. This will affect every company in that sector. Then I move to the industry group. Automobile components is an industry group within the consumer discretionary sector. I say give me 20 points about the industry group, and it does. All of these are prompts. So you have some things you need to know about core industry dynamics and structure. Some things you need to know about financial and operational realities. Some sectors have particular types of accounts, particular types of balance sheet structures. Some companies in consumer discretionary are very asset intensive. Some are very asset light. So this here is points about financial and operational realities. Shifting strategic landscapes, because consumer discretionary is known for its technology that changes the type of product or service. So what do the companies have to be doing to stay relevant? And regulatory and future-looking considerations. 20 points at the level of the industry group. 30, we go on to 30 points about a sub-industry. We've done the sector, it applies to everyone. We've focused on an industry group, it'll apply to all companies in the industry group. Now within the industry group, you have automobile components manufacturers and automobile manufacturers. So let's do 30 points about automobile manufacturers, core economic and market dynamics, financial and operational reality. See the trend going on here? Once we get through the 30, give me 40 points that I should know about General Motors. Give me 40 points I should know about Ford. Give me 40 points I should know about Tesla. By the time you finish these 30 points, you're going to know a lot about the sector, a lot about the industry group, and a lot about the sub-industry of automobile manufacturers. And now we want to know the differences of the companies. So we'll go through that. Corporate structure and legacy, the EV transition, how they're handling that, the technology, how they're bringing that into their company, international operations, and always you end with something about their financial profile and their capital allocation. What else do we have here? Forward-looking risks and opportunities. There we go. Materials, same thing. 10 points about materials. Then I go into metals and mining. Here are 20 things you should know about metals and mining. We go into the copper mining sub-industry. Here's 30 things you should know about the copper mining sub-industry. And down here, Southern Copper, 40 things we should know about Southern Copper. That's a 100-point system. 10 plus 20 plus 30 plus 40 is 100 points. And these are 100 prompts. So you can build your own research analysis about a company by saying, give me these 2 prompts from the sector, these 3 from the industry group, these 4 from the sub-industry, and maybe these 8 from the company, and you can build your own report of just what you need. Consumer staples. We have the beverages industry group. From the beverages, I go to the brewers. And from the brewers, I don't know if we finished this one here. We're going to do 2. We're going to do Molson Coors, and we're going to do Boston Brewing. It's not in the S&P 500, so it's sort of outside. So I thought once I get past the sector, if I'm just giving the LLM the big prompts and saying, write me a paragraph, why don't I give you the prompt, and then you can determine what paragraphs you need. So these infographics will start appearing for every sector, every industry group, every industry, every sub-industry, and every company within the industry for the S&P 500. With the use of AI, I can do that much faster. So that's going on in the sector studies, which is in applied analysis. Also in applied analysis is the AI for finance. Took a week off last week. This week, the entry tomorrow is really going to be heavier on the reasoning, going into the process of reasoning for deductive, inductive, and abductive reasoning. And that's it.